Hello and thank you for joining us for our second YouTube recording. I plan to do these briefings on a monthly basis in the middle of each month, or if something special occurs. The links to all of these YouTube recordings are on our website. Yesterday I was in town with Tim Farrelly, who's a business advisor that we use for our business, with some other advisors. Again, we were going over the world outlook and investment markets in Australia, and what we again feel is that the world is really in for a low inflation, low growth period. Australia, we feel, will probably fare better than that, but we'll see. Secondly, in China, we spoke in detail at our last seminar last year with regard to the housing situation, how some 50 to 60 million new apartments have been built for affluent Chinese investors that remain unoccupied. This does not take into consideration the real need of about 80 million apartments or residences for lower to middle class workers in China, and therefore we see domestic consumption and structural growth in China continuing. In Australia, there was a very interesting article by Don Stammer, again a very good business advisor and investor of many years, and Don commented that he felt that the Reserve Bank of Australia was now even in a stronger position than it was prior to the global financial crisis, due to the Reserve Bank strengthening its liquidity, also its funding and its capital positions. It was interesting, in October the Australian Financial Review brought out a report talking about the top fund managers, and we noted with interest that in the last decade the Dimensional Australian Value Share Fund, which we use in our portfolios, was ranked in the top 10. That's pleasing because about 3 years ago we started using this dimensional investing process in our portfolios, and we're pleased to see that even though it's done well for us in the time we've been using it, longer term it's been performing well as well for our portfolios. It's interesting with regard to what's happening in Europe. I remember that I read this book by a chap by the name of Thucydides back at school in 1980 concerning the Peloponnesian Wars, and this was a set of wars between the Athenians and the Spartans in Greece back in 400 to 430 BC. Anyway, what happened was the war ended up that the Athenians lost because they invaded a place called Sicily, and in Sicily there was a tyrant by the name of Dionysius. Dionysius, in order to beat the Athenians, borrowed a lot of money from his people, and therefore there was a foreign bond crash back in about 400 BC. And this was because Dionysius had had to borrow so much money for this war. It's not lost on me the parallel of today of the borrowings that the Americans have had to make for their wars, unfortunately. Anyway, Dionysius was faced with the dilemma, as the Greeks are today, about how to pay off its debt. What Dionysius did was that he insisted that all the Greek drachma coins were brought to his mint in Syracuse. He then reminted every Greek drachma coin at the value of 2 drachmas instead of 1 drachma, and then handed them back to all the people. Dionysius felt it was better to halve the value of his currency than only repay half of his debt. An interesting thought for the times. Please remember to join us for our seminar on the 3rd of November. We look forward to talking to you again. Cheers.